Of course, all eyes will be on Jackson Hole, Wyoming this week as central bankers gather in the mountains for their annual meeting. Joining us now with everything we need to know before the big trip is Yahoo Finance reporter Jennifer Schonberger. Hey, Jennifer.
Good morning, Rochelle. As Treasury yields are trading near their highest level in 15 years, all eyes will be on Fed Chair Jay Powell's policy speech this Friday in Jackson Hole for just how hawkish the Fed is right now. The Fed minutes last week revealed that the majority of Fed officials were actually in favor of further rate hikes last meeting, noting that inflation still remained unacceptably high and most members saw, quote, significant upside risks to inflation. Since then, of course, a couple more inflation reports have showed more cooling. But with markets on edge, Fed Chair Jay Powell is expected to echo his message from the July policy meeting that inflation remains too high and that the Fed is committed to bringing inflation back down to the central bank's 2% target. Of course, the devil is in the details and the key will be in his nuances. Does he hint that the Fed is encouraged with the latest string of cooler inflation data and at a point where the Fed can move into an extended pause? Or will he set the table for still another one or two more rate hikes? Rochelle?
And we know we'll be passing through every bit of intonation in his voice there. Now, talk to us about nominal rates as well and the impact that they're having on real rates.
Yeah, this is very key, and your last guest brought this up as well. We've seen nominal yields on the 10-year Treasury go up over 4.3% this morning, as you mentioned, coming into the program. That means that real yields, which is adjusting for inflation, are bumping up against 2%. And bond traders have been telling me if real yields were to get above that 2% level, that could be problematic for the Fed. It raises the question of how they would filter that into setting monetary policy if the bond market begins doing the Fed's work for it. Of course, I'm going to be in Jackson Hole later this week. I'm going to put this question to Fed officials themselves to find out. And the other point I just want to make is that even though we are at or near the point where the Fed could move into an extended hold, the next very big pertinent question is how long will the Fed remain at those levels? Right now, perhaps the question is the market under anticipating how long they will see a 5 handle on the Fed funds rate? If it's longer than anticipated, that could create some market reverberations. Rochelle?
We know you'll be keeping track of all of that for us and keeping us up to speed from Jackson Hole. Our very own Jennifer Schonberger. Thanks so much.